So you could have a strategy that only wins 10% of the time, but when I win that 1 out of 10 times, I make 20 times more than I lose. So I have a bunch of really small risks, for example, but I have one really big trade that wins a whole lot more. So when you're thinking about the expectancy or the outcome of your trading strategy, it's not just the win rate. It's the win rate and the profit factor that matter most together, because you can still have a winning strategy that still yields positive results even with a low win rate. In fact, it's very common to see, as we've discussed here before, there's really kind of two types of trading strategies out there: trend following strategies and mean reversion strategies. It's really common to see a really high win rate with mean reversion strategies, but their risk to reward ratio is slightly tighter. Common to see a lower win rate for trend following strategies, but their risk to reward ratio is a lot better. I tend to look for strategies, especially in trend following, that are between 60 to 70% win rate and have roughly a 1.5 to 2 profit factor. It's the two together that matter.
Peter, do you remember what the difference is between a trend following and a mean reversion strategy? Pop quiz.
I think I could remember this, but
So for trend following, what you're doing is that you're trying to, let's say over here, this is a trend. This is where the price moved in a particular direction for a while. And so for a trend following, they're trying to capture as much of this move as they can, right? So they might wait for a trend to be established, like over here, get into the trade, and then get out, let's say at a certain amount, leaving the rest. Whereas a mean reversion, someone might say, "Hey, if I take a look at this price, it's going up and then down, and then up and then down. And so when it extends a lot in one direction, I'm going to put a trade to profit when it goes down, and then I'm going to profit the other way when it goes back up because I'm trying to aim towards this mean." Let's say most strategies, especially that retail traders are going to be dealing with, fall into these two categories.
a trend strategy, is that riskier?
It depends how you It depends on the trend, depends on the asset, depends how volatile it is. So, for example, the SPY, if we take a look at the SPY, if I were to say, hey, I'm doing a trend on this and my time horizon is 10 years, well, chances are I'm going to go up and to the right. And if I was betting on these things happening, these mean reversions happening, that might come, it might be once a decade, once every 5 years that it might happen. And so you'd have to size it differently. But if I'm on the 5 minute chart, and I'm trying to get these changes, that might be a little bit easier. It may be a little bit easier for mean reversion, depending on what you're doing.